Hello, everyone, and welcome to the second session of the NUS live series on cryptocurrencies. Today, I think we have a very interesting session, all on DeFi. It's been a space which has been blowing up over the last year quite a bit, and we are going to talk about the impact of cryptocurrency on finance. And my name is Tobias. I'm the principal at Blockchain Founders Fund. I am an alumni at NUS. I did my master's degree there and a SENS double degree, which was an amazing time. And I'm also very excited to announce that we have a special guest, which is Shane Hong. He is an expert in the crypto space, has a lot of experience as an operator. But yeah, Shane, if you want to kick it off with a short introduction, that would be fantastic.
Yeah, sure. Hi, everyone. So like Tobias mentioned, Shane, and I'm head of marketing at a Kuiper Network. So we are a project that actually develops software and technology that helps facilitate the trading of digital assets like cryptocurrencies. And this software can be utilized by any application or website in the space. So like Tobias, I'm also alumnus of NUS, but I did my BBA and graduated in 2015. So it's quite surreal, I guess, to be talking to NUS students and stuff here today. If not for the pandemic, I guess we could be speaking together at Moktarari or one of the lecture halls, but this is the next best thing, and we are in a digital world right now, so really glad to be here. A little bit about my background, I guess. So I've been doing marketing for my past roles after graduating from NUS, and at Kuiper right now, I'm leading most of the marketing and communications efforts for the project. I've had the privilege of working with some of the top blockchain projects in the space, like Coinbase, Binance, FTX, Instadep, Aave, Compound, and yeah, it's been a wild ride since I joined the company back in 2018, and happy to share more information about DeFi today.
Thank you so much, Shane. I think it's going to be very exciting. Just a quick sort of outline. We prepared, or Shane prepared basically, an awesome presentation on DeFi and sort of giving you all who are interested a step-by-step explanation what DeFi actually is and what sort of application it has to a real world. And then of course also what Kuiper Network is doing. And I'll jump in a little bit, talk about the investment side of things from a venture capital fund who has invested quite a bit now in the DeFi space. And then of course, in the end, we're going to have a lot of time for questions. So you can feel free to just, put some questions in the chat. We will address as much as we can. And yeah, I just want to say thank you, NUS, for having us and hosting this awesome session. And I hope to see many of you maybe in person, since both of us are still in Singapore. And, as Shane said, maybe there might be a possibility of going back to in-person event. And yeah, please feel free to reach out on LinkedIn and stuff if you have any other questions besides the session. But then I think, Shane, love to kick it off with your awesome presentation. And then if you can give us a quick rundown through the next 10, 15, 20 minutes, and then we jump into Q&A at a later stage.
Sure, let's start.
Fantastic, awesome.
You can see my screen, right, Tobias?
Yep, perfect.
Okay, great. So yeah, I'll just go straight into it. For today's topic, I guess the general topic is about decentralized finance and the impact of cryptocurrency, blockchain, DeFi on the finance industry today. So I think we got to first understand, right, like in today's world, how financial data and transactions are currently stored. In the past, without computers, we have to do it and record this information on a ledger, right, a physical book. With computers, you can key in information on the Microsoft Word, Excel. If you want to really be safe and back up your data, you can actually back it up to the cloud. But this information also goes to centralized servers around the world, right? And the common thread between all these different methods of storing such information is that they are all localized in certain locations and in centralized systems. And what this means is that in the event where there's some unlikely event, for example, your laptop gets run over by a bus, or the server rooms in these servers overheat, and catch fire, it is technically possible for this information to be destroyed permanently. But what's more insidious is that in certain situations where a lot of this centralized storage of information are controlled by tech companies, like Amazon, Google, Facebook, Apple. Technically, they are able to control your data, and they are able to perhaps be privy to your data. And in some cases, they might even sell your data, right, or manipulate your data. So there are third parties, intermediaries that are actually controlling this information. And the thing about the finance industry today, the financial system, it is actually built upon this legacy technological infrastructure. And so financial services are actually controlled by third parties, intermediaries, like a typical financial institution would be like a bank, or hedge fund, and or agents, right, that help hold your money on your behalf and help store financial information on your behalf. And in this centralized system, with information stored in centralized servers, it's more opaque. There's always going to be counterparty risk because you have to trust these intermediaries and these institutions. And what's unfortunate is that because they're controlled by a few middlemen and a privileged few, there could be some people in the world, in different parts of the world, that do not have access to these financial services. So today, we are able to actually disintermediate a lot of the financial services and common financial services to a very large extent. And this is due to the advent of decentralized finance. But what exactly is decentralized finance, right? So it's just basically taking all your typical financial services, assets, investment vehicles, and replicating it or building it from scratch onto a decentralized network. And the most common form of a decentralized network we have today is a blockchain. So this is my definition of DeFi. There's no fixed definition, but how I see it is that DeFi is an open financial system that is built on a decentralized network that anyone can access, and you do not need to trust third-party intermediaries. This is possible because of blockchain technology. So this is there's a lot of literature about blockchain, and this is a term that's thrown around in the media a lot in recent times. So I'm not going to go into too much detail, but just to give you a quick refresher, right? So essentially data in the past, when it's stored in centralized servers, now it can be stored on the blockchain, and people can add new information to the blockchain and append and update the history of transactions that have been occurred, from the beginning until now. And this information is then distributed to a network of computers all over the world that are helping to validate the information. And so each of these computers have a shared history. And what this means is that there's no central point of failure, right? And you don't need to depend on a third-party tech company that is controlling and holding your information and data. And you can actually interact with anybody else that has also access to the blockchain. So some of the key traits of blockchain technology is that firstly, it's permissionless. Anyone has open access to it. It's trustless. You don't have to trust a tech company. You don't have to trust a third-party intermediary for the data that's stored there. That it's censorship resistant, meaning no one can actually control that information or manipulate or tamper with the data. And it's open source, it's transparent, everything is verifiable, because every computer that's helping to validate all the information that is stored in the chain of data blocks, so to speak, they are all able to verify that information is accurate, and no one can tamper with it. So the most famous of all the blockchains, like the granddaddy, origin OG of blockchains, is Bitcoin. It was created in the aftermath of the 2008 financial crisis. So during that time, due to the collapse of like institutions like Lehman Brothers and the subprime mortgage crisis, there's a lot of resentment towards the financial institutions and maybe even the government in general, because of some of the reasons that I explained earlier, where a lot of the processes, financial processes behind these institutions, they are opaque, they are decided by a privileged few. And so the creator of Bitcoin, whoever he, she, or they are, nobody knows, he goes by the pseudonym of Satoshi Nakamoto. He created the Bitcoin network to be a peer-to-peer electronic cash system. So this Bitcoin network is predicated on two main features, right? One is that anybody that interacts with the Bitcoin network, they are able to transfer value, send payments across the network in a decentralized, efficient manner to another person who is interacting with the network, right? Without the need for intermediaries, without a third party. So you don't need a bank like Lehman Brothers. You don't need an agent to help you send money on your behalf. You can do it on your own as long as you have connection to the internet and a Bitcoin wallet address. And with Bitcoin as a medium of exchange. The second main feature is that there's only ever going to be 21 million Bitcoin Bitcoins that would be minted. And I guess this is one of the objectives for this is to kind of preserve the value of a currency and what some people call now, ultrasound decentralized money, where there is no way to increase the supply of Bitcoin. And this is opposed to the centralized traditional financial system, where in certain countries, let's say the US, with their monetary policy of, they can print more USD in order to stimulate the economy, resulting in inflation at times. With Bitcoin, you wouldn't be able to do that. And now in recent times, Bitcoin is also known as digital gold, as like a hedge against inflation and as a store of value. So all these sounds, really useful, right? As a payments mechanism of transferring value. But the thing about Bitcoin is that it is only able to store, receive, and transfer value across the Bitcoin network. Even though, with all its benefits, this is its main function. But if you are talking about the full suite of financial services in the world today, this is not sufficient, right? Because this is only handling payments. So developers that have already interacted with the Bitcoin network, they realize that they need a different sort of system that still has all the benefits that a decentralized network like Bitcoin has, but on top of it, introduce more functionality, more use cases. And that is how Ethereum started. So some people call it like the world computer. It's in general a general purpose blockchain technology where a whole open financial system of different services, different games, different applications can be built. And this is possible because unlike Bitcoin, Ethereum has what we call smart contracts. And these are programmable set of code and rules that you can write, right, and introduce and store and execute on the Ethereum blockchain. And what this means is that it gives developers, programmers, a lot of freedom, a lot of potential to exercise their creativity. They're able to create all sorts of different applications on the Ethereum blockchain using smart contracts. So Bitcoin to Ethereum is similar to what a calculator is to an iPhone, right? Where a calculator is very good at performing one single function, but an iPhone has many different apps. You can also calculate stuff there. You can take pictures, etc. So these Ethereum and Bitcoin are the two highest market capitalization cryptocurrencies right now, and the two most famous blockchains at the moment. So for the purpose of this talk, I'm only going to talk about Bitcoin and Ethereum. So with Ethereum, as I mentioned earlier, developers can create many different kinds of applications using smart contracts. And if the Ethereum network, for some people, they see it as really the backbone of decentralized finance and where DeFi really first started. The Ethereum DeFi ecosystem today has thousands of different applications. This is just a fraction of how many apps there are in this ecosystem map. And with the different dApps, decentralized applications that are out there, these companies are also trying to improve their products. They're trying to raise funds by issuing their own cryptocurrencies. And again, this is only possible with smart contracts on Ethereum and other similar blockchains that are smart contract enabled. So with the whole proliferation of many different tokens in the space, they are used for many different use cases. You today see so many, right? There's a lot of noise and it's very difficult to really pinpoint and learn about them. So to recap, right, the centralized financial system, it has very opaque systems, it has very controlled access to the services. The information that is stored in these third-party intermediaries and controlled by these third-party intermediaries are subject to manipulation. But unlike the centralized financial system, with the advent of blockchain cryptocurrencies and DeFi, you have an open permissionless system where anybody can access it. Anybody with internet connection that interacts with the network can access it. And it just is really like what I call a great equalizer. Anybody would be able to access the financial services they need. They are able to verify that the information is accurate. And for the first time, they can actually own their money. Before Bitcoin and a decentralized network, if let's say you own a piece of land, right? You have a title, a deed to your name. In certain jurisdictions, in certain countries, it is possible that the government might take away your ownership of that land. But in a decentralized network like Bitcoin, if you owned a Bitcoin 10 years ago when it first started and have it in your wallet, today you will still own it as long as you have the private key, the password to decrypt your wallet. So for the first time in history, actually, you've truly owned a certain asset. So just to give you a few use cases of how DeFi is impacting the finance world today. First of all, trading, right? This is the most common use case in the financial world. People trade stocks, trade commodities, different assets. So in a centralized financial space, there are certain hours where trading happens. Markets close on the weekends. But in a decentralized exchange and decentralized trading environment, this is completely open and permissionless. There are no signups required with your account. Anybody with a wallet can access the network, can also access a decentralized exchange. And you don't have to deposit any of your own assets onto a decentralized exchange. You only just need to connect your wallet. And this is open 24/7, 365 days a year. So to give you a quick example, recently, for those of you who trade US stocks, GameStop had a situation where a bunch of community members on a Reddit forum called Wall Street Bets, they decided to rally the community to buy GME stocks, and because they heard, right, that there are a lot of hedge fund managers that were trying to short the stock. So due to a variety of reasons, but in general, they were trying to use social sentiment to drive the price of GameStop stocks up. Robinhood decided in a controversial move to actually stop the purchase of GameStop stocks on its application, which is basically kind of preventing people from buying, right, more GameStop stocks and only allowing them to sell. So in contrast, in a decentralized exchange that is available on the Ethereum blockchain, this is not possible. No one can kind of manipulate the price of a token, a crypto, through a decentralized network. And trading will happen, 24/7, 365 days a year. For lending and borrowing, in traditional finance, you will need to go through an intermediary like and financial institution like a bank, right? In the decentralized finance space, you can lend your assets to another person by interacting with the blockchain and get interest in return. And borrowers are able to obtain more capital for margin trading or for other kind of investment opportunities or to pay back their debt without selling their current assets. And this is all done in a non-custodial manner, meaning you don't have to deposit your assets with an intermediary like a bank. The assets are stored actually on the blockchain in smart contracts, and provided that the code is audited and verified, you know that the money belongs to you. The assets can be withdrawn anytime, and you can transfer these assets anytime, and only you can do that based on your Ethereum wallet. For insurance, so this is not health insurance, but more like financial insuring against loss of funds. So on the blockchain, you can also protect against any kind of vulnerabilities in the code, any loss of deposits by going to decentralized marketplaces that connect users who are willing to pay for insurance with other users who are willing to insure their funds for a premium. So if you are willing to cover a certain user for a certain amount, together with other users, you are going to get a regular premium for that service. And instead of a company deciding whether your claims are valid, if that's in an unlikely situation when that happened, when a hack happens and you lose money, who decides on whether your claims are valid and whether you can get your what you're owed, right? So in centralized finance, usually this is decided by the company, right? And a few some could be they use an external auditor to do this, but in general, these are centralized processes. But in a blockchain, in the decentralized network for insurance claims, usually you can get a decentralized network of jury members, of people on the blockchain that can help process these claims and help validate whether your claims fulfill the certain criteria and framework. For asset management as well, you can actually combine trading, insurance, lending and borrowing all into a single platform to track your assets, track all your outstanding loans, all on the blockchain and within a few clicks. And this is usually not possible in centralized finance when you have to depend on the advice, on the custody of the hedge fund manager. But now with the blockchain, you can be your own hedge fund manager, or you can copy other hedge fund managers that are managing their portfolios on the blockchain. So NFTs are also a very thrown about term recently. Just as a quick overview, these non-fungible tokens are tokens that are verifiably unique on the blockchain. So I think the easiest example to think about is art, right? A unique piece of art that an artist has commissioned, that has drawn and has uploaded onto the blockchain. And with this unique token represented by an NFT, a unique art piece that is represented by an NFT, they are essentially allowing their fans to have a piece of their creation. And it's real true ownership of that artwork, as opposed to a physical piece of art, which you can't verify. If you are not an art connoisseur, you can't verify whether the art piece is real. You can see that it looks beautiful, but for the NFTs on the blockchain, by definition and by the fact that they are non-fungible token on a decentralized network, you are able to verify that this is a token that was actually given out by this artist, which time, how much is valued, etc. So Ethereum, along with all the different financial services, has also empowered artists with the ability to create new things and have a direct engagement link with their fans and their audience. So today, the DeFi space has gone up to over $80 billion in assets locked. So usually we look at this as AUM in traditional finance, but in DeFi, we usually call this total value locked, or TVL for short. And if you are interested in getting started in DeFi, this is of course a very basic introduction. So I'm just going to share with you, these are some of the services where you can actually buy crypto with USD or SGD and transfer this crypto to Ethereum wallets like MetaMask, Ledger, Trezor, and all those examples that I showed here today. And with these Ethereum wallets, you are able to interact with applications on the Ethereum blockchain or even other blockchains. So how does Kyber and the Blockchain Founders Fund, play? What's our role in the DeFi space today? So for Kyber Network, we are dealing with the trading, of digital assets and cryptocurrencies. What we are, what we're trying to do is, a good analogy would be, I guess, a money changer. So in real life, when you want to go overseas for a holiday, you might need to change your SGD to, the US dollar or the Thai baht or the renminbi, You go to China. So you have to go to a physical shop at the arcade at Raffles Place to exchange your currencies. And the money changer there will open his drawer or his vault, and he will take out the currency that you need and exchange it with you for a cut. So Kyber is essentially doing this, but at scale and through a decentralized manner on the blockchain. So we are pooling liquidity or different assets from different sources. We have our own pools as well, where anybody can deposit these tokens. And by pooling all these assets and liquidity from different sources, we are able to give good rates and facilitates trading for any DeFi application that has integrated with us. So we are one of the most used and well-known blockchains in the space. And we launched one of the earliest decentralized exchanges in 2018. And we also have our own currency, and we raised $52 million back in 2017 by issuing this cryptocurrency. So we have worked with some projects like Exodus, HTC, where they have a blockchain phone, where they have dApps that have Kyber integrated with, and users of the HTC blockchain phone, they are able to actually trade in cryptocurrencies easily without leaving the phone, without using another device apart from the phone. We also worked with projects like X Infinity, and the CanC token is already available on certain mainstream applications like Revolut. So in total, we have facilitated about $6 billion worth of trading volume. We have $500 million locked in our smart contracts on the blockchain today, and over 100 different applications have integrated with us. So now I will pass the time on to Tobias. I have a question for you, actually, Tobias, after this. So Tobias, maybe you want to share a bit more about the Blockchain Founders Fund?
Absolutely. I mean, and first of all, thanks so much for sharing. It was absolutely fascinating of how many different applications are already possible in DeFi. And the way you broke it down was, I think, super interesting. I see we already got some questions in, which we'll try to answer shortly. Just really quickly, sort of from an investment perspective, because we are early stage venture capital fund. We have invested in about 57 companies now on a very global scale and just raised our second fund in Singapore. It's a $50 million early stage fund. And we basically have invested in a lot of different companies in the crypto and the blockchain space. You mentioned NFTs before, which is super interesting. We invested in a company called Splinterlands, and it's basically a blockchain-based NFT game, a card game essentially. When you were a child and you collected your sports game and things like your sports cards and stuff like this, is essentially what you can do on that game. And they launched a token, and the token went up in 48 hours to a $3 billion fully diluted market cap, and now sort of stabilized at 1 billion. So there's a lot of traction volume in the NFT space right now, especially in gaming, just because you can actually own a digital asset in a game, which makes it, I think, very, very attractive. But yeah, in general, like we really look into like all of the different sectors you have mentioned, and also in DeFi. But basically, we look at sort of two things, and I think that's important to mention, which is, first of all, how do we bring DeFi to the masses, right? Because right now it's still a little bit fragmented, that not everybody is using it. And then the second point is really about like how to bring real life assets on chain, so how do we make this accessible sort of for everyone else? And that's sort of the idea we do have with our fund, and we support early stage companies. And yeah, definitely happy to connect with everyone. And you should really check out Kyber Network as well. Yeah, Shane, if you have a question, please go ahead. Otherwise, I'm just going to try and pick and choose some of the questions we already got. So thanks so much for the audience for already pushing on some questions. Happy to pick them up in a second as well.
Yeah, I can kickstart this segment. I guess I have a question for you, Tobias, because of your experience in investing in early stage DeFi startups and crypto startups. With so many cryptocurrencies and dApps in the space today, how do you have like a certain framework? I mean, if it's proprietary or confidential, you don't have to share it, but do you have a certain criteria or framework when you look at which projects to invest?
Yeah, no, I think it's a very good question. I mean, we look at it two sides, right? I mean, a crypto company is still a business essentially, right? So the founders have to be strong. There have to be a business use case in the market, and we sort of have to believe that that's something which will, hopefully to be the next unicorn in the best case, or at least gonna, raise follow-on funds. So the whole business side is still super interesting and super important for us, regardless if it's a DeFi company or a NFT company, or like, a normal blockchain without a token in a supply chain, for example. That's all super, super important. On the other side, like I said, we look at two main factors, right? Because essentially we want to bring crypto and DeFi to the masses, right? Essentially give everyone the opportunity to join. And right now, from a user interface perspective, it's still a little bit fragmented to get on, right? There's a lot of different applications. You kind of need to understand how it works. It's not like the internet where you download a browser and you can go on and like, get everything done. It's still a little bit more, hasn't reached that space yet. So we look at, first of all, and that's also a question which I saw in the chat, sort of, which is interesting for investors in the crypto world, is essentially, how do you breach this gap, right? Is there a company who can bring sort of that mainstream adoption into the crypto space? I mean, I think cryptocurrency in general, we have reached some sort of adoption now, but DeFi is still a little bit early, right? So we need to bring it to that way. And a lot of companies who facilitate sort of bringing more non-crypto native people to DeFi is something we're super interested in. And the second big part, which is super interesting for us, is the whole, how can we tokenize real life assets and bring it on chain? So like tokenization of real estate, or even just talked recently to a company who focus on how to bring a Louis V bag, for example, on chain, right? How to store it then, and how can I, as an investor, buy a little piece of a Louis V, for example, or any other sort of high class asset, and then essentially store value and trade it, and use it for other DeFi applications as well. So these things are super interesting for us, and I hope that sort of answers your question, Shane, as well, and hopefully answer the question also of Chua in the chat as well. But yeah, let me try to pick and choose something for you, Shane. I think that could be super interesting. And there's two questions which sort of go together here, which is, now I think a lot of graduates, they think, okay, should I go into crypto? Should I go into blockchain? Is that something which is sustainable, or should I maybe just go to, any other company not in the space? So Shane, how did you actually land this job, and what do you think is the biggest challenges for you to actually work in a cryptocurrency company or a crypto company, a DeFi company, right?
Yeah. So, it's interesting actually how I got like found out about crypto. But so just like any nascent industry, right? There's always a gap in terms of like the talent pool at an early stage. So I would say that given that crypto and blockchain is still nascent, there's really a lot of opportunities for people, whether you're in HR, marketing, finance, no matter which department, a lot of these blockchain projects are looking for talent. And this is a ripe time for you to come in and explore the space because in the long run, the competition is going to be tougher for sure. And the thing is, we're already seeing like a brain drain from traditional finance or even traditional fintech space of people coming to crypto, being interested in crypto. But I guess what you need to think about if you are interested in the space is your objective. First of all, you really generally need to be passionate about the technology and the products that are being built on top of this technology, no matter which company you're joining. If it's really about trading cryptocurrencies, you can do it in your own free time, right? You don't need to get into the industry just to do it. And I guess if your motivation is correct, you should definitely read up on as much as you can about blockchain and crypto. A lot of companies, they do put that it's preferred but not required that you have blockchain crypto knowledge. But I would think that most of them really value the time and effort that you put in to actually use their applications, use the dApps right there on the blockchain, create your own wallet. So show them that you actually that you're actually interacting with the blockchain and not just know it theoretically. And the benefit of such a open, collaborative, and decentralized kind of like network and environment is that a lot of the founders are also on the ground, right? They are talking to users, getting feedback. They are very accessible, and this is very different from CEOs or founders in traditional companies where there might be many levels of hierarchy before you can reach them. You only can reach customer service. But in the blockchain space, I think a lot of the founders are really much more accessible. And I think this is a byproduct of the fact that crypto in general as a space, it's more collaborative, more open source, collaborative, accessible to everyone. So reach out to the founders themselves and talk to them, and if you're interested.
Very interesting points, and I completely agree with it. I think there's so much change and it's so fast paced. So also from a responsibility perspective, right? If you're a graduate, I think you're gonna be able to move quickly in the space and also reach very interesting positions, probably a bit faster than in some other traditional bigger environments. So thank you so much for sharing, Shane, and Jack for the question in the chat. I have another question I want to touch on, which with crypto, not everyone is sort of happy about crypto. Some do criticize DeFi and crypto a little bit. So what would you say to someone who thinks that cryptocurrency has no inherent value?
Oh, yeah, the question popped up. Well, there are definitely detractors and in any for any new technology, and I'm not gonna sugarcoat the whole DeFi space and crypto space and assume that it's all it's like bit and roses, right? But So there are definitely challenges when it comes to this industry. There are growing pains, just like any new technology. Just like when the internet, first started, there was this
Yeah.
.com bubble. So to a certain extent, in some cases, DeFi and crypto is also experiencing some of these traits, right? And I think a lot of the negativity with regards to crypto and DeFi is that a lot of the projects that raise funds by issuing their cryptocurrency, uh, they're selling. Some people feel that they are selling like a pipe dream, right? And they may not have the motivation to continue and improve the product and create more products and improve and like just develop the company after they raise such a big amount right from the start. And you have seen cases for sure that uh, a lot of like projects suddenly they disappear, and in some cases where the smart contracts are not audited correctly, the founders might have run away with the funds,
Mm.
right? And so I think these are, there are many cases, right? But you should not throw the baby out of the bathwater. In a new industry like this, you have to work with the different stakeholders, the different companies in the crypto space. In some cases, it's good to even work with the government when they are thinking about regulation, and to have a very constructive kind of discourse between different parties to see how you can protect the interests of the customers, and not um, just have a blanket view of DeFi crypto as a space full of scams, used for money laundering and for illicit activities. So there are cases where that happens, but majority of the use cases on DeFi that are disrupting the traditional financial space are not involved in that. So yeah, I think crypto itself,
Yeah.
first of all, I mean, for the cryptocurrency itself, in terms of its value, it's really in the eye of the beholder, right? I look at it as and kind of like an alternative asset class, and just like how people collect vintage cars, art, they put a subjective value to it, and there's for somebody who doesn't want this cryptocurrency, there might be another who values it very highly. So at the end of the day, as long as they have a legitimate product, they have a working product, they have a team that is, engaged with the community,
Yeah.
preferably, I guess, transparent, and people know who they are, and the code is audited. There are a lot of safeguards in check. It you who's to say like how much cryptocurrency is worth, right? Because there's a market for it.
Yeah. No, I think that very much agree with that. I mean, even if you look at it from a pure economics perspective, right? If something has a value, it essentially ticks two boxes, which is scarcity and utility, right? And then if you look at crypto, you mentioned Bitcoin before, which has a cap sort of on 21 million. You have scarcity, and obviously you have utility as well, right? And it's even divisible. So with one Bitcoin, you can buy a sandwich, but you can also buy, a house essentially, right? I mean, and it's decentralized, meaning there is no government, bank, or a single person which has control over it. And so, in my opinion, it ticks these boxes. But obviously, you need to be smart about it, do your homework, and just deal with something you understand and sort of trust in a sense, right? There will always be challenges. And that sort of brings me to my next question, which I think is quite interesting in the current climate. It's the whole regulations which sort of pop up now, or like governments are now looking at it more closely, and even BitMEX I think settled for 100 million just recently. So what do you think is the effect? For example, we have a question here from Miley's who said, how would the recent crypto regulation exercise in the US affect the price of the cryptocurrency? If you want to give your thoughts on this as well.
Sure. So I guess it's referring to the infrastructure part of the infrastructure bill that was just passed in the US.
I think so, yeah.
Yeah, so for the component about crypto and blockchain, if I remember correctly, what the proponents of the bill were trying to do is to, I mean, for governments, one of the key motivation is taxes, right? For any
Yeah.
kind of new innovations or companies that are coming to the US to set up a company and build up business, if there's a lot of value in that industry, the government will need to tax, right? And it's not wrong because they need money to stimulate the economy and for other allocations. But in general, I guess they want to tax these crypto companies, right? But the problem lies in the definition of what they view as a crypto broker. So if I mean a broker, at least in the if I remember correctly, in the original bill, they were trying to define it as anybody that is facilitating the transactions of crypto.
Yeah.
And this means it encompasses like developers, the not just centralized intermediaries, but like software developers, people who are providing ancillary services, users that are trading. So it the umbrella term for that is too broad, and that means it requires everyone, a lot of people, different stakeholders, to record their transactions, their financial data, and a lot of this data may not even be available for these stakeholders because they can't get it, or it's very, very difficult to get it because in the blockchain a lot of this is decentralized, and it goes through many different hoops, right, for each transaction. So what I think this reflects on how some senators, they might not have a very good understanding of blockchain and crypto, or maybe they do, but they're trying to kind of protect the interests of their own the legacy financial system. And but there are also senators who are trying to amend the bill, and it's really great, to see that there are senators who have deep understanding of crypto and try to narrow the definition to ensure that it's only centralized exchanges like Coinbase, Binance that would require very detailed kind of customer KYC data, because they are able to collect that and they have been doing that, and they have the responsibility to do that, but not to include like developers and software and other kind of software and other blockchain-based services that don't have a centralized entity. So I don't think in the long run, or even in the medium term, it will really affect the price of cryptocurrency. Maybe in the short run, people just see the news. Okay, the bill was passed, and there's this definition. Maybe I should like short it, right, for the next month. But I think even in the next few months to of course, this is not financial advice, but this is my opinion. In the long run, this will not really affect the value of cryptocurrency because you can already see that there are many senators in the US who are aware of the huge potential that cryptocurrency has, blockchain has, and what a decentralized network has, and they will help, I guess, lobby for new rules and regulation that will help innovation to flourish without being stifled by very narrow definitions, very very restrictive regulation that will inhibit all these processes.
I think a good way to put it is sort of in the short term, this might cause some headline risk essentially, right? But as you said, in the medium to long term, regulation would only add further legitimacy to the asset class, in my opinion, just because it is more regulated and more secure, and also provide some sort of regulatory code, around the existing cryptocurrency exchanges. I think, which is overall beneficial in the long term.
Yeah, I think I'm pretty impressed with how Singapore, right, case in point, has been very progressive when it comes to welcoming, and experimenting even with this kind of cutting edge technology.
Yeah,
they have
exactly.
Project Ubin.
There's even a question here, Shane, which says,
okay,
is DeFi-based platform legal to incorporate in Singapore? So maybe we can address that a little bit, sort of how it was maybe for you guys as well. But as an investment perspective, I also see a lot of crypto companies popping out of Singapore. Like basically the biggest amount we source are coming from Singapore. So how is your take on that?
Yeah. So as I was saying, like for Singapore in general, the government and MES, they have been really progressive. I think Ravi Mellon himself have spoken about cryptocurrencies and blockchain a lot of times. And his team seems to me, right, that they have a good understanding, and they are willing to work in a sandbox environment to kind of improve the whole industry. So when you talk about DeFi-based platform, I guess this is a very broad like term. I think we need to kind of make to make distinct like the difference between the protocol on the blockchain, a decentralized protocol on the blockchain, and an interface, right, where users like you and I use to interact with the blockchain. So software on the blockchain, protocols on the blockchain, if ideally, right, in theory, they are decentralized, they are permissionless, they are open access, and there's nobody who can kind of get your information as a user if you connect to it through an Ethereum wallet and interact with it through an Ethereum wallet. So the protocol itself is decentralized, it's non-custodial, open access, permissionless, and it's very difficult to get information about the user to and to actually kind of regulate that aspect of the blockchain. But if you're talking about the interface, mobile applications, and like websites, these front-end interfaces that help users to interact with the blockchain, technically, they can be controlled, right, by the, let's say, a government that does not want this website to be live. Technically, they are able to do that. But that does not mean that the protocol itself, the product, the cryptocurrency DeFi product itself can be shut down because somebody else in another part of the world or can just create another website that interacts with the blockchain as well. So you need to kind of, I guess, separate what is like a decentralized protocol and the interface that you use to interact with the protocol and the blockchain. So interface-wise, yes, it is, what's that? Like for now, it's all covered under the Payment Services Act that the MES recently came out, I think, earlier this year. But if you're talking about, so it really differs, right? It depends on the product that you're talking about in general. But yeah, for the interface-wise, it is possible to control that, but not for the protocols on the blockchain.
Very cool. Thanks so much for this very comprehensive answer. I think it was very nice how you sort of broke it down. I think we have time for one last question for another 5 to 6 minutes left, which just came in from Ang Hui Min, which is, there's a couple more questions actually coming in. Let's cover these quickly. What are investors looking for in blockchain companies? I mean, we focus on blockchain as 3 different things, essentially. First one is we look at for, blockchain companies, but they don't have a token. For example, Checkit is a portfolio company of ours. They basically try to put supply chain on a blockchain to bring more transparency and sort of reduce the middleman in that structure. Again, very strong founding team and already work with Fortune 500 companies such as Coca-Cola and Merck. So a lot of adoption, which is great for us as an investor. The second part is everything which sort of supplies the crypto industry. We invest in a company called Banks. They provide cryptocurrency companies with debit and credit cards, for example. And now they raised at $100 million valuation out of the UK. So again, very strong. And the third bracket we look at is DeFi and NFTs, just because that's something which is just incredibly hot right now in terms of a sector. And again, here, I think it's very much aligned with what Shane sort of, in this presentation. we look at the use case of it, right? So we're not a token fund, we don't invest in a token and just trying to speculate. So we actually look at, okay, is the underlying technology useful? Is it audited? Does it make sense? Are the founders strong? And do they know how to create a community and attract people towards their platform, which is basically product to market fit, what you hear a lot of times in the VC space, when you just try to see, okay, is someone out there who is eventually going to pay for that product? And if it's a very innovative product that hasn't been there, then of course it's a bit more risk, because you need to sort of experience and try to get to that product market fit and try to identify who is potentially your customers. But if the founders do have experience and the platform works and has a good interface, then we are very happy to support that company along the way. I don't know if you have only 3 minutes left. It's a little bit challenging to pick the last question. Shane, can we maybe take the last question in very short, which is, do you foresee DeFi exchanges overtaking centralized exchanges in the long term?
So well, it's difficult to predict if they will overtake in the long term, but there are already instances where there are some decentralized exchanges, for example, like Uniswap, that overtake Coinbase's volume in certain times, right? And so we are already seeing it, right? But in the long term, what I can say is that I don't think that centralized exchanges would disappear. I feel that they have a role to play to a certain extent, primarily due to the fact that there needs to be an on-ramp from the fiat world, what we call fiat, meaning like for currencies, right? Your national currencies like Singapore dollar, US dollar. So there needs to be an on-ramp from the fiat world to the crypto world. So you need to purchase cryptocurrency using your SGD or USD. And centralized exchanges are usually the point of contact for this kind of trades. You can do it peer-to-peer in real life if you can find somebody, and there are certain websites that like local crypto that facilitates this as well, where you can meet the person in real life, give him cold hard cash, and get the cryptocurrency in a hardware wallet and do that, right? But that's a bit dangerous, and it's not very practical, I guess, if you are in different countries. So centralized exchanges still have a role to play, in my opinion, and I hope personally that DeFi exchanges do overtake centralized exchanges in terms of volume, because trading through decentralized exchanges is definitely more secure, in the sense that it's using, it's based on the security of let's say the Ethereum blockchain. So you get all the benefits and traits of the blockchain: trustless, non-custodial, transparent, verifiable, censorship resistant. So for a centralized exchange, maybe you deposited like $100, but somehow due to some reasons they didn't receive it, and it is possible that they can just tell you that they didn't receive your $100, right? And even though then you have to go through the whole legal system to get it back. But for a decentralized exchanges, the money either goes in or it doesn't, right? It's totally verifiable on the blockchain. And so I think there are a lot of benefits using DEXs, in short. And I feel that in the long run, I hope that the volumes will overtake centralized exchanges, but I always think that centralized exchanges would have a role to play.
Awesome. No, I think that was super insightful, Shane. So thanks so much for sharing all your insights and preparing the presentation. And also thank you so much for all the people who sent the question and tuned in, and for all the ones who just missed it, or just trying to tune in now, but it's unfortunately run out of time. This is a NUS live series, so there'll be 3 more coming. In total, there's 5. The next one will be all about investing in crypto, so don't miss that. I think it's also going to be super exciting and sort of builds on DeFi as well. So yeah, I hope to see many of you guys on the next series, and there again be awesome panel, sort of giving you a bit more insights about investing in crypto. And again, Shane, thanks so much for joining, and thank you NUS for having us. It was a pleasure. And any other questions, happy to connect on LinkedIn or any other platform and take it from there. So thank you so much, everyone, for joining. It was a pleasure.
Thanks, Tobias. Thanks, NUS Hui Xian as well for helping to organize this.
Thank you, Hui Xian. Yeah, definitely.
We had a very welcoming audience today. Yeah, we tried to keep it within 1 hour. So sorry if it's a bit rushed, but yeah, I think we did discuss quite a lot about DeFi crypto today, and we're happy to speak at my alma mater.
Thank you so much, Shane. Fantastic. Awesome.